invest in what you know, not what people are talking about.
Hey, what's up, guys? Welcome back to another episode of Mentality. It's your boy Gambo, and I have two special guests with me today, Denzel and Femi. Today we're discussing what happened with Gamestop stock and lessons to be learned from that historical moment. Stay tuned as we chop it up in another interesting episode. All right, welcome back to the show, guys. I'm here with two good friends of mine, Femi and Denzel. How y'all feeling today?
Pretty good.
Feeling pretty good. Feeling good, man. Thank you so much for having us.
Of course, it's a pleasure. So, obviously, the topic today, we're going to get into some of the repercussions of GameStop, what happened, lessons to learn from it, and also how Robinhood ties into it, and some of the other financial institutions and laws and regulations that kind of aided and abetted into this whole situation. But before we get started, kind of want to get your introduction and for you guys to tell us a little bit more about yourselves. Femi, do you want to go first?
Absolutely. Thanks so much, like I said, for having us. My name's Femi. I've been in the finance field for just a little over 5 years now. The GameStop thing specifically it interests me in a number of different levels, just seeing how the whole thing played out. So I'm excited to, kind of touch base, get into a little bit of the details that I feel like were kind of largely overlooked throughout the media blitz that took place earlier.
Right. I feel that. Denzel, how about you, man? I know you a rock star. I know you famous and all that. So you don't be shy, man. Tell us all about it.
Not at all. Just like Femi, been in the industry about 5 years, and I've been doing day trading for maybe, I guess, the past 3 years. Like doing it hardcore 3 years.
Okay.
And the GameStop situation was it was one for the history books. I'm pretty sure there will be a movie about it at some point.
Facts.
There will definitely be a movie about it. So it's a complex thing, but there's some lessons within it as well.
That's a perfect segue because there's like 3 or 4, maybe even 5, don't quote me on it, movies already in production. Like
For
they have
real?
titles. Yes, they have titles. They have HBO's got one. And like if HBO's got one, everybody
got one. Facts.
like everybody's got one.
My money's on Netflix. I think Netflix. Netflix gonna drop that trailer by the summertime.
Hey, yo. It's funny, but it really actually might have it though.
I mean, I don't even doubt it. Like I'll send you guys the article afterwards. Like I definitely saw like it has, because that would be the article the article I was reading about the movies is my quote for the show is this is only for educational purposes. Like that is like that's just the quintessential quote for the entire GameStop phenomenon. It's like this is only for educational purposes, much to what Denzel said about having this be a big learning experience for the future, like a huge learning experience. But I'm excited for those movies for sure.
Word. But so I think like the whole GameStop thing, right? It's been some time now, and I think at the heart of it, people sort of understand or have an idea of what happened. So at the heart of it, it's pretty much just a big short squeeze. A bunch of people from Reddit, Wall Street Bets, pretty much wanted to stick it to the man, and they started rolling over GameStop, a stock that people considered dead. It has no value in the books. If you look at the basics, the fundamentals, it's pretty much a dying business, at least not seem to be profitable for the next 3 to 4 years. But big investors shorted it, people who were on the other side who feel like they're sick and tired of the man sort of like dictating what the stock is going to do or the industry is going to do. They wanted to counter that. Essentially, they wanted to basically short squeeze the stock. And so putting all these bets that it's actually going to go higher than it should be. So they keep pumping all this money into it. And investors are losing money on that. Can you elaborate a little bit more about what happened before we start digging into like the lessons of it?
Sure. I mean, I think you covered the broad strokes. I think the broad strokes are understood. Somebody took some large hedge funds took a short position out on, GameStop, and other people, in this case, Wall Street Bets and the rest of the larger retail market, they were against that trade. So someone's betting something went down. Somebody else, another group of people is betting something went up. That's, the broad strokes. And obviously the exacerbated effects of that, were played out in real time. Something that was valued at $10, $15 a share suddenly shot up to 400. Like there's a finite number of things you can do other than saying, Jeff Bezos is going to buy my company that would justify a stock price change from one to another.
Right.
What I found particularly interesting, and when I think I really got into the fray with it, was the day that they didn't allow anybody to buy the stock. You can only sell the stock.
On Robinhood, right?
Yeah. And that's the thing.
It was a couple. Yeah.
Yeah, it wasn't just Robinhood. It was Webull. It was, TD Ameritrade, Schwab. Like everybody did it. And that was when it was like, it started to really become a head scratcher. It's like, there's always one person, in this case, Robinhood, that everybody's going to lay the blame on. Mm-hmm. But if everybody else who does the same business that Robinhood does, or to some extent, is starting to do the same thing that Robinhood is doing, then there's a larger systemic issue. Like Robinhood has X amount of cash. Mm-hmm. E-Trade, owned by I think Morgan Stanley now, has way more cash. So if you're both making actions to try and limit your cash reduction, then there's a larger issue. And I think that's what for me kind of really stood out in the situation. I'll definitely get into the details. I did a little bit of research obviously before this. I'll get into the details of what I found out was the cause of that.
Can I interject really quickly with that thought? So do you think that essentially that these companies, they did have the cash and it was something else? Or are you saying that they did not have the cash?
I believe that they did have some cash, but there was a larger ask. There was a larger situation at play that a lot of people did not know about. And that's what I believe, kind of got covered up in the media blitz, that a lot of people didn't really understand, was that no, there's other parties here, not just the brokerages, not just Robinhood, E-Trade, and the rest of them. There's another party here that you'll have to understand a little bit more about how the interconnections of finance work in order to really make sense of the actions that were taken on that day.
Gotcha. Denzel, what do you make of all of this? I mean, I guess Femi and I, we kind of covered a little bit of what happened. You sort of have a different viewpoint of what happened.
No, it's pretty much what y'all said. It's just that I think what it was, a group of people gamed the system, right? Mm. So by gaming the system, the top players don't like that. So when you saw Robinhood stop making trades and all, I do believe that, there's a few phone calls made that day. Some people, we don't say who, but we're going to say some people put pressure on different companies and different brokers to, and I think that's why you saw the whole big stop of trade, because you have billionaires seriously losing billions, by the minute. So I think, you just had bigger players getting more involved. And it's going to be interesting to see the long-term effect of this. I still don't think we've seen the effects of it. Mm-hmm. I think there could be some more rules, some more laws going to be in place soon. It's going to change the word free market, because it's not free. Because the rule is, if you can find a loophole and make money, they're going to come and make some changes to the game.
Right. I think to sort of give people a perspective of how crazy this is, I think Femi quite well elaborated that this is not common. Jeff Bezos has to say I'm probably going to buy a company for your stock to jump 17,000%. Right. I mean, this stock literally went from was it $17 at the beginning of the year? It was at $340 something.
Yeah, even when Jeff Bezos does say I'm going to buy this company, you don't see that sort of meteoric rise. He bought Whole Foods, and Whole Foods wasn't up 10,000% next week. I was right. All right, bro, great, so that's what's kind of crazy about this, was just how quickly it was happening. And one of the touch points, to dive into it, one of the touch points I found particularly interesting is I'll often see articles from news financial outlets. It's retail investors are getting into X, insert different industry that they're getting into. And what they mean by that is mom and pop investors, people who are at home. They're not big institutions. They're not hedge funds. They're not, market makers and so forth. Just ordinary people like us are getting into a particular asset sector, a particular area. And, Denzel, we probably share this joke, you want to read the fine print before you buy into the hype, because right. Sometimes if everybody's jumping into something, it's why? What's going on? And I'm pretty sure my mom asked me, like, do you have GameStop stock? And I'm like, all right, like, yeah, I know this is out of control now.
Right.
When my mom is asking me, she's definitely not concerned about the markets. I was reading up on the hearing that took place in Congress after the fact, after the whole thing. And I was excited for that hearing for two reasons. One, they actually found like the main like Wall Street guy, I think his name was Keith Gill or something like that. They found like he was like the first guy like telling everybody like, yo, we should buy GameStop, you should buy GameStop. They found him, they dragged him up to Congress, which I'm always like it always weirds me out when like normal, ordinary people end up in front of Congress and like
just looking awkward.
Like this isn't really and it was on Zoom, so it's like, what up from my basement or something like that. So they dragged this guy up to Congress, and I read through some of the transcripts. He was like, look, I was in his class, he's like, this was informational only. This is only for educational purposes. I was just telling the internet, YouTube, Twitter, Reddit, any social media outlet I could get my hands on. I was telling the internet that I think GameStop's going to go up. There's nothing illegal about that technically. Obviously, he probably told them that he had already bought some GameStop. He bought a significant amount of GameStop. And I think what's interesting is how many people need to latch on to an idea before it becomes like a flood, essentially. Like how many people are like, yeah, I don't know. He sounds kind of right. You know what? Let's do this. And then I called Denz and I'm like, yo, Denz, I just talked to, this guy on Twitter and he says GameStop's going up. And Denz like, that sounds like a great idea. Let me just dump some cash in that. That's when it definitely starts to get a little out of control. Furthermore, during that hearing, we learned a little bit more about what actually took place the morning of, the day that Robinhood and all these other brokerages said that you can't buy this stock anymore. You can only sell it if you have it. Otherwise, you just have to wait. It's written here. I'm going to quote just because we're going to keep our facts. At 5:11 a.m., the NSCC, which is, I guess, is like a broker dealer. So what people may not know, just to give you some background, is when I buy a stock, if I buy Apple stock at whatever price it's trading right now from, let's say I'm actually buying it from Denzel. Denzel's not getting that money immediately. Instead, what happens is I give my brokerage money,
right?
E-Trade. Then the brokerage contacts Denzel's brokerage, Schwab. They say, yo, he owes the stock. I get the stock. They essentially facilitate that trade over the course of like 2 or 3 days in some cases. And then he gets money, I get stock. Now, obviously, I could have easily sold it in 2 to 3 days' time, especially if I'm like if I'm day trading. But that's essentially what takes place. So that money, that 2 to 3 day money, still needs to be there. Now, obviously, if you're trading an incredibly liquid stock like Apple, and it's not moving crazy throughout the day, $18 to $400 in a couple of days, that's easy. Your risk, your margin that you need to keep on hand, the amount of cash that you need to have in order to satisfy these demands or these trades. However, if something suddenly went from a value of $18 to $483, and there's somebody buying 50 or 100 or 1,000 different shares of this company, you might not have enough money to clear that trade. You understand? Like you might not have enough money to pay Femi or Denzel the amount of money that person's due. So the NSCC is essentially the facilitator of these trades. They do, the interconnections of, getting the money to the person, getting the shares to the counterparty. And they call Robinhood at 5 a.m, same day, which so definitely something that, was like triggered overnight. And they called at 5 a.m. They're like, hey, you owe us $3 billion. Like, just want to take a moment and pause there. Like, can you imagine somebody calling you at 5 a.m. like, yo, what's up? Yo, I need that $3 billion though. It's like, what? Like, huh? And, people can look up the transcript here, but long story short, Robinhood had $696 million with the NSCC that morning at that time when they called. The NSCC calls, they say, we need $3 billion. They're like, how did you get to this number? They're like, well, based on what we see as, huge market volatility and the number of trades that could happen, we need to have enough money to send to people who will have, who will make these trades. So if I bought 10,000 shares at $18 and I sold it at $483, somebody owes me a lot of money. like a lot. And you don't want that situation where it's like, hey, I can't get my money out. That could be a cascading effect across the market. There's like, wait, there's no money left. My liquidity dries up. Nobody wants to buy. Nobody wants to sell because you're not sure if you're going to get paid on the other end. They are like, look, you owe us $3 billion. Give us the 1.2 or 2.3 or whatever. They gave some calculation of how they got to the 3 billion. And at that point, they're like, that money's due immediately. Otherwise, we may not be able to guarantee your trades. And this is 5 a.m. They're going to open the markets at 9:30. So shout out to the guys at Robinhood, getting a call like this at 5 a.m. and then figuring out what they're going to do. What they actually did, as the transcript states, is at 7:30, they made the decision, Robinhood made the decision that they were going to impose trading restrictions, essentially saying you can only sell the stock, you cannot buy it, to at least reduce the total risk that the stock would continue to climb. Now, obviously, this just came out, 2 weeks after, the mania and the craziness that happened.
Mm-hmm.
That moment, you're not really thinking about the details. You just heard from Robinhood, I can't buy what? Like, you're pissed.
Snapping, right?
Yeah, you're snapping. Like, I thought I was going to, we were going to the moon yesterday, and all of a sudden I'm not. Like, that's crazy. NSCC, after they called the NSCC, Robinhood's like, look, we cut off trading. Nobody's allowed to buy. They're only allowed to sell. Obviously, if you're only allowed to sell something, supply and demand, economics come in real quick. The price is going to fall pretty hard. And NSCC is like, okay, you don't owe us $3 billion. Instead, we're going to relax that down to about, I don't know, 1.4 billion. But you already had 700 billion with us, so just give us another 700 million, and we should be good, at least for today. And that was essentially, that's a situation. That's what happened to Robinhood. I like to believe that the NSCC and other parties like that did the same exact thing to Schwab, Webull, E-Trade, and said, hey, you're going to have to pay us a lot more money if you want to trade this stock this way today. So they all collectively were like, nope, you can't buy AMC, you can't buy GameStop, you can't buy Nokia, you can't buy BlackBerry, because we're not 100% sure how crazy this train is going to go as far as price increases, and we may not have enough cash. Not we, the brokerages. The brokerages have cash, but the trading part, this is like the party behind the brokerages, may not have enough cash to successfully clear these trades and give everybody their, what they were actually due.
So you said a lot, and I think at the heart of what you said, what I gathered was that this is essentially an intervention from the SEC to mitigate the influx of buyers who are coming in. And if I'm hearing or anticipating where you're getting at next is that you feel that somebody sort of triggered the SEC to do this, or a group of people, a group of somebodies triggered the SEC to do this.
I mean, I'm not going to lean too heavily into the conspiracy theories.
Denzel, how do you, I'm sorry, were you going to say something, Femi?
I just want to clear up one detail. You said SEC. The party and this particular party card is called the Nancy SCC. So two completely, the NSCC is a private company that they just facilitate trades. That's all they are doing.
Okay. My bad. I misheard that. I thought you meant the actual SEC. Okay.
No.
Got you. Denzel, what are your thoughts on this? Do you feel, or do you share the same sentiment of where Femi's coming from?
I understand it both ways. If I'm working for Robinhood, I understand the move because you're making a business decision. So I get it. But we live in America, so it's supposed to be a free market. So if it's a free market, then why are you telling me I can't buy something? It's not a free market. So that's the gray area. So me being on the trader side, I don't like it. It's a free market. If people want to buy, let them buy. But like I said, if I was on Robinhood staff or whatever, I'd probably support the move because of what Femi said. So it depends. It truly depends on what side you're on, right? But overall, there will be long-term effects of this because they told people, no, you cannot buy AMC, you cannot buy GameStop, and that's not how this is supposed to work.
But I guess so I agree. I think we all share a sentiment of it shouldn't work that way. But the reason why it happened is sort of what we're trying to uncover, why it happened. And I think we kind of got a lot of that from Femi's perspective. It's they want to make sure that people are not losing money at the top, and they want to make sure there's the cash to be cleared for all these trades. Mm-hmm. So that makes a lot of sense. I think you even alluded to that, Denzel, right? If you're on Robinhood staff, or if you're on TD Ameritrade staff, you're like, hell no, we need to shut this down ASAP. That makes a lot of sense. But if you're from on the trading side, you're like, well, I just want to ride this train and buy. I think we get that. Femi, do you want to say something?
Especially, I want to highlight, like, especially when you add in that it was like a David and Goliath kind of thing, where Goliath represents the hedge funds, these people who rob companies, pillage companies of everything, during shorts and corporate boardroom raids and all this other nonsense. And then a group of guys or a group of people on the internet just, trading. They're like, they knew the risk. I saw a number of articles. There was like, the traders on Robinhood may not know. I'm like, no, they definitely know.
They
like, I'm confident they know. Like, you're not buying Hertz stock after they publicly announced they went bankrupt unless you really got an agenda, So like, they definitely knew. But much to Denzel's point, like, bro, that's not my problem. I am trader A with $1,000 in my account. You're telling me that Robinhood, who just completed series whatever of funding with X billions of dollars, those guys can't clear my money? That sounds like a Robinhood problem. That's not a me problem. I could easily see where that perspective would rise, especially if we're looking at the banks get bailed out and all these other things that people don't like about banks. But then all of a sudden, I'm trying to get my money from $18 a share to 400 and something, and somebody says no, that's corny. And like I said, I want to highlight that the NSCC is a private company. It's not a governmental thing saying, oh, y'all need more money. The NSCC is essentially saying, we don't feel comfortable with the amount of money you've currently given us. Remember, they had $700 million with the NSCC already, that you could be able to, that we can clear the trades for you, Robinhood. As a result, we need more money. Like, and that's where, both sides of that coin kind of come out. It's like, that's not my problem. Like, to be honest with you, that's a Robinhood problem. That's an NSCC problem. That's not my problem. I should be able to trade freely and effectively. Why, like, y'all got billions of dollars over there. Y'all telling me I can't trade my 50 or $80 in my account on some Robinhood stock? Like, come on, that's crazy.
What I think is also interesting is when this started, I think a lot of people took the position that this was going to be another Hertz situation, that it was going to be just another pump and dump, right? So people are just going to like toss some money. It's going to go to the moon. They're just literally going to hop out. But I think, Femi, to your point, people knew. They weren't like really in it for just the bread. Like, a lot of people were in it to like stick it to the man. It was like, oh, hold the line. We're just going to keep putting money in this. We don't care if we lose all this money, but we just trying to like stick it to the man. So I think to that point, yeah, like people definitely knew what they were doing. So for the media to sort of like make it seem like, oh, they didn't really know what they're doing. There might have been a few who didn't know what they're doing, but for the vast majority of people absolutely had an idea of exactly what was going on. Right. So I think here's like the big question for me. We understand, like, sort of both sides, but was it justifiable for Robinhood, TD Ameritrade, Charles Schwab, all these big companies to sort of like put an end to buying these stocks?
I believe, and I could be wrong, but I think there's a lawsuit already against a few of these brokers. So like, it's not the right thing to do. I'm sorry. Like, you can't just tell people you can't buy stocks because you're making our rich friends upset. I mean, when you break it down, that's what it comes down to, right? And for example, like, I had shares in AMC way before all this happened. So I bought AMC shares way back in, I think, April, when the stocks first dropped. Mm-hmm. Now, my reason buying AMC shares is because I'm thinking long term. Mm-hmm. 5 years from now, 10 years from now, do I think people will be going back to the movie theaters? Of course I do. I don't see 5 years from now everybody still watching movies from home. Most people still miss just going to the movies, going to see a movie on the big screen. So I think that for me, that's why I bought AMC way back before all this happened. Now, when this happened, I got a very nice payday. So, of course, I sold all my shares of AMC when they first popped.
Pump and dump.
I just want to highlight that detail.
I definitely sold it way before I thought I would because I legit just looked at my portfolio and it skyrocketed. I'm like, I said, well, let me sell first and then let me see what's going on. But that goes back to my quote, which was, invest what you know, not what people are talking about. Because you had a lot of traders trying to get on this train and they got on too late and they lost. I know people that lost a lot of money because they thought it was going to keep going up.
Gotta hold the bag.
Right. And so like that's why my quote I think is important because I invested in AMC because of what I knew. I looked at the numbers, I looked at it long term, and that's why I bought shares. I didn't buy shares of AMC or GameStop because of Twitter, like Femi was saying. You know, I may go to Twitter, I may go to Twitter to get some, some feedback or like see what people are talking about. And I'll go do my research. But you got a lot of people, and people calling me, yo, should I buy GameStop right now? I'm like, what do you know about this situation? Oh, I just see the memes. I see this. I'm like, right. That's not the answer I want to hear.
No investment ever started with, I saw the memes and I just knew.
I think one of the single best pieces of advice that I've ever kind of gotten when it comes to investing was invest in the rumor, not the news.
Buy the rumor, sell the news.
Because when you're buying the news, it's too late. Kind of like what you're saying, Denzel, right? Like, so this has already happened. The numbers are already so high. Now you're trying to buy in at a high level. And also on the show, we don't really preach or we don't really talk, short-term trading. We always think long-term. I believe in a buy hold strategy. I believe in slow and steady in that sense, especially when I'm like building a portfolio in terms of stocks. That's sort of my approach. And I mean, I think this is certainly a conversation that we can have offline, gentlemen, about sort of what your strategies are. But I think to your point, Denzel, I think some people bought in too late, and unfortunately, a lot of people paid the price. But going back to the main question, which was, do we think this is ethical or not? It sounds like you're taking a pretty firm stance saying that absolutely not. It is not ethical because people are being cheated out of positions, and it's to really pretty much save the wealthy. Do you really think that's the only and main reason why this sort of happened? That kind of goes to both of y'all.
Well, I mean, we talked about the real reason. We talked about like the monetary, like the legality reasons. Like what Denzel said is true. Like that's not fair. Like what they did that day to save their own asses was they put potential profits out of reach. Like essentially, like those profits were not out of. So like, let's say you did buy AMC. Let's say you bought it last year in March when it was at the complete bottom. You know what I mean? And you were like, bro, we going back to the movies. James Bond coming out, new Fast. There's no way we're not going back to the movies, And you were a level-headed investor where you made a decision that like, I'm buying this because I know we're going back to the movies. It's a great opportunity for me to buy a good stock. Then this nonsense starts happening, and you decide, look, I bought in at $2. It's at 20. I made my money. I'm not greedy. I'm out. This has truly been long term. It's been a whole 365 days or a little bit close to it, and I'm out. But then Robinhood decides to save their ass, and then they're like, "Oh, we just gonna cut the music." That's what happens. Like it's like that record scratch. Like wait, what? We can't trade. We can't buy. We can only sell. Like that immediately infuriates people. But I want to paint you this other picture. Imagine, right? That day, that didn't happen. They just they got the call at 5 a.m. They're like, shut up. Forget the NSEs. And then around 2:00, you decide to buy some GameStop stock. And the brokerage, Robinhood, took your money at $400 a share, right? You bought like 10 shares. You're out. Good chunk of cash. And then you get a notice or Robinhood just goes down, like it's a technical glitch and it goes down. You're like, it's not that bad. I'll probably sell later. It's probably still going up. And then there's news on, the headlines like brokerages unable to fulfill orders, trading liquidity dries up instantaneously. And what that is like, imagine you put your $400 out there, or you put your $4,000 out there to get some cash or get some shares. And then all of a sudden, Robinhood isn't able to fulfill its duties. And it's not that Robinhood can't. NSCC doesn't have enough money to guarantee that you bought something at $400, sold it an hour later at $500, and you can get that $100 profit per share. They can't guarantee. They don't have that money anymore, so they can't make that guarantee. Now the entire stock market essentially freezes. I mean, obviously, I'm making a huge exaggeration of what would happen, but there's definitely big ripple effects in the entire market because all of a sudden the belief that this is a free and fair, open market for me to buy and sell securities is now not so free and it's not so secure, because I don't know if the person on the other side of this trade actually has that money, or if the NSCC is willing to fund the money that I'm due. Now you have a complete lockup. S&P 500 drops,
Right.
50, 10%. Like that's the scenario that these guys, the trading brokerages, try to stave off in this. Now, obviously, like I said, this is a huge exaggeration. Please do not come at me sideways like, you're wrong, that would never happen, there's all this money. I'm just making something up. It's like, hey,
I feel you. Yeah.
this could have been a reality if proper measures weren't taken. And do I wholeheartedly understand why somebody would be like, that's not my problem? S&P got money. Robinhood got money. NSCC got money. They all got
I want
money.
my bread.
Like, just give me my money back and we'll be good. I definitely understand that. But to your original question, is it ethical? Is what they did? I'm going to also go with no, but I'm going to give the proviso that I understand why they did it.
Fair.
Was Denzel cheated out of potentially higher gains on AMC that day or the day before, the day after? Probably yes, because
Denzel done sold his stocks. He good. He done made his profits.
I'm just saying that, like,
I'm
if
joking,
he had held, to that point, if it was, I don't know, let's say it was at 20 and he bought at 2, and now he's thinking it's going to get to 25, and that was his price target, he was going to sell at that point. Did we cheat him out of that $5? And then he ended up selling at 12 because the stock plummeted the day when you couldn't buy anymore. Did we cheat him out of that, $13? And the answer to that question is technically yes, because you don't know how high that price would have gone that day. Anything can happen intraday until the bell rings. You don't know, So there's where these lawsuits and some of the grievances, I think they're founded. They're coming from an honest place. But if people really understand the dynamics of the market, there's definitely reasons behind it. And I will say, I did more research. There is conversations about why these private companies, NSCC and the like, can just charge ridiculous amounts of money, and essentially put capital restraints on the brokerages. Because that's what happened. Somebody asked you for $700 million at 8:30 in the morning, and you have to give it to them. You won't have enough money to clear everything else for the rest of the day. You know what I mean? Like, does that company have the authority to do that? Shouldn't there be some regulation? Shouldn't there be a backstop that says, look, like, as long as we all keep trading, things should work out. But there's a lot of unknown unknowns that you open up when you get to that point in the conversation.
And I think too, with the thing with Robinhood, I think the reason Robinhood is getting such a a bad look because of this is because you got to remember that Robinhood was made for the people, right?
Fair.
Because Robinhood, if you look at it, they kind of was the game changer with the fees. There was the ones that said no commission fees, blah blah blah. If you're just an average Joe, you can come and trade, right? I think back in like 2016 on Twitter, Robinhood tweeted something like, "Let the people trade." And then in 2020, they stopped from people trading. So that's the problem we have here, is that Robinhood was kind of made for the people. That's why you saw other brokers take away their fees, because like, oh, Robinhood, that's a smart plan. Look, trade with us, no fees, this and that. That's why Robinhood has so many users. Then it's almost like it's Robinhood and it's protecting the little people. But then the big brother came, and then Robinhood just turned its back on the little people.
Right.
And I think that's why you saw like so much negative feedback from Robinhood, because people that trusted Robinhood is like, yo, y'all made the platform for us, the average people.
Right.
But now you're obeying to the higher ups.
I totally understand. And I think I agree as well. I think in terms of ethics, it was unethical. But I'm glad Femi was able to like paint an opposite picture, like of what would have happened versus what did happen. And that's where I really want to kind of like, what I want to sort of like touch on like a little bit more, is because I think people don't understand how dangerous this could have been. Like, it's all fun and games, like, oh, pump and dump, hold the line, let's take it to the moon. But like realistically, like we're all, I would say, like the three of us are pretty reasonable investors. We're pretty much working people who, live decent lives, right? And we invest our money, and hopefully we do that smart and wisely. and we don't really have any part of this GameStop spiel. But imagine these big hedge fund companies who are in these positions, and now their companies are like losing money. Their funds are like losing a lot of money. So think about what that means for you and I and a lot of other people. Your 401ks, your Roth IRAs, all these positions that you're in, that these hedge fund managers have positions in, that goes down with it too. People don't think about that. It's like, okay, it's like a system. It's messed up because you want to take down the system, but the system is made to be intertwined to the fact that like you can't take the system without going down with it.
Yeah.
And so like I think people don't think about that aspect, and it's like that's danger, right? Like people who are like daily investors who are just living their lives, they don't have anything to do with this, Wall Street bets, are also going to go down with Wall Street bets, which is kind of fucked up.
I mean, I think you brought up a couple good points, and I want to add some details. There is reports that even in the midst of all the Robinhood versus Melvin Capital, which is the main company that took out the short, institutional investors were making money. Like real money makers were getting into Robinhood and getting out before things got really crazy. So I'm like, all right, so let me get this straight. We, the people, find a stock. We're all excited. We're going to go buy it. Sucks for that guy who had a short on it. That's not my problem. And then you're telling me that real traders, like people who do this for a living, was getting in on my gains and they were able to get out before the music stopped, but I can't? Like, I'd lose my shit on that too. Like, Word. Absolutely. But we think about it. We talk, like you said, we're rational people. And you said something, you was like, the whole system would collapse, but it's like the whole system's not designed to collapse. But you're telling me essentially that one game stock, like one stock on an exchange potentially could collapse the entire financial system if liquidity isn't managed correctly. Like, that's insane. What kind of system is this built on if we could just take GameStop to the moon and then it's like, we got to shut it all down. I mean, granted, they didn't shut down Apple. They didn't shut down, SPY. They didn't shut down Twitter, Snapchat. They only shut down a select number of stocks that were likely to cause a number of volatility points. But what's to stop everybody during the next time this may happen? They're like, all right, we out, bros. Like, let's go through this. We taking Twitter to the moon. Oh, they shut us down. All right, we out, bros. Let's, it was like, there's a problem here if you can't mitigate that risk. Just because GameStop was the company that everybody was riding on doesn't mean that the problem can't be applied to any company. Ford is trading under $20. Like, you could all jump in on Ford tomorrow. Like, bro, I love the F-150 and just ride it to them, and we'll be here like, oh, like NSCC called us. We need $3 billion by Tuesday. That's the problem. And that's, I think, I can easily understand why people are frustrated about that and why the whole thing looks a little stupid. Like when Melvin Capital and the other company that had the short position, they closed out their position. No questions asked, meaning that they went back, bought the shares at this new high price and closed it out. Was it a little advantageous for them if the share price conveniently fell that day? Probably, yeah. So you could easily see why people be really upset about this. And it's definitely, it goes to the larger system. Like I said, it goes to what's the regulation? Where's the line? Do we let companies run free and fair markets, or do we have to impose some restrictions? And nobody wants to hear the R word, regulation. When it comes to the stock market, like forget it. Like let's go.
And I think that's really where the question is, right? Is because like you make a point where it's like, from the average Joe's perspective, you're like, what you mean? Like my $1,000 can't get cleared. Like, what you trying to tell me, dog? Like, I know y'all got the bread. Don't play with me. You know what I'm saying? So it seems so trivial, but if you really look at it from a holistic perspective, there is a potential threat in that regard, right? So like you bring up the question, like, what do we do to mitigate this from ever happening in the future? Are we going to like put systems in place to regulate the NSCC? Are we going to put systems in place to regulate these companies like Robinhood and TD Ameritrade from ever shutting down buys? What do you guys think is going to happen?
I don't like to delve into politics too much.
I mean, as far as the future, you mean future in the sense of trading, right?
Yes.
I think, within the next year, we're definitely going to hear about some new, rules or laws, whatever. But they have to be careful because, like I said, if it's a free market, then let it be free. Y'all figure it out. Because my thing is, I'm for the little people, right? I saw articles about people paying off their student loans, paying off their houses because of GameStop or AMC. That's good. That's what's up. Especially when I saw an article about a teacher making more than her salary in 2 days
from GameStop.
From GameStop or AMC.
Yo, people was making a killing though.
It was either AMC or GameStop. But the point is, here's the thing: she's a teacher in this country, and she had to go on Twitter or whatever to make enough money that's more than her salary. Like that's the problem. That's the problem. So if you're gonna change the financial system, I think we got to change it from top to bottom, everything. Let's not just focus about stocks, but everything, because a teacher shouldn't have to make her salary or double her salary in 2 days.
Shouldn't be able to, at least.
Right. And then get cut off. Then say, oh, no, you're making too much. Can't do that. Like, what? Like, what are we doing? Like, what are we doing?
No, he's 100% right. The inequality there is like crazy, because if you think about it was in the report, like the average Robinhood investor is 30 years old, between $200 and $5,000 in their account. So hardly millionaires, if we would be honest, not exactly people who are, just gushing at the bits of just free money that they want to just throw into the market. These are hardworking, regular everyday people. It's kind of sucks that they, you're telling me I could pay attention to some dude I've never met on Twitter or Reddit and I can pay my mortgage off? Like, hell yeah, I'm listening to that guy. Why would I not, Because the guy at Melvin Capital, who, granted, they lost a lot of money, they're still going to get paid massive bonuses, no matter what. Like, that's the reality of it, So, who's really left holding the bag? Is it the stockholders? Like, GameStop's up to, I think, 100 and something. So, even if you started at 15 and you're at 100 and something, that's a good return over 2 months, It's
a great return, yeah.
But if you did all of that, maybe you bought at the high of highs and then you ended up selling a lot lower. You bought at 250, 300, and then you sold at 150. Like, you lost a lot of cash. Melvin Capital, they're going to be fine. Like, they might shut up shop or change, what they're doing, but they're going to be just fine. Now, is that Melvin Capital's fault? Probably not. But it is the fault of a lot of, negative, restrictive and, socioeconomically disenfranchising laws and regulations that are out there that don't really allow for people to accumulate their own wealth, and they now look to Reddit to grow it.
Right. I'm going to just put this out there and not really touch too much on it, and you don't necessarily have to talk about it either, but because there's going to be a rabbit hole. But I'm really curious to see how blockchain sort of restructures the whole financial system, because that's like, this shit is not going to happen. Once we are fully integrated with blockchain, and where people are really starting to fuck with cryptocurrencies and shit like that, which I do personally believe most likely will happen at some point. Maybe I won't be alive to necessarily see it fully integrated. That shit won't happen. But anyhow, so I think in terms of the lessons from this, right? My sort of takeaway from this has been, if you made your bread, cool. If you were lucky enough to take advantage of it, cool. But the way I saw it personally was it's a gamble. This is a lottery. If you made bread off of GameStop, AMC, Nokia, BlackBerry, whatever, I don't recommend you do that shit again thinking you're going to be up. You know what I'm saying? That might have been a one-time thing. We might see the trend kind of sort of happen again because things are so hot right now. Like you said, GameStop is 150 or 130 or something like that.
Yeah,
right? It's still hot. But don't think you about to throw some money at some Ford or some whatever stock you hear on Twitter or AMC or Wall Street Bets, and it's about to ride up again, because this is probably not going to be the trend long term of how to make money. So I think my sort of summation is that one, if you made money out of it, cool. Take your winnings, pay off your mortgage, whatever you got to do. That's awesome. Two, you have to understand that this could have went really, really left. This could have went way left to where even if you made money, you would have been fucked at the very end for reasons that we just mentioned and talked about. And I know it sounds kind of crazy. What you mean? The system's not going to collapse. Trust me, dog. Like this joint's kind of fragile. So those are sort of my takeaways from this. What would you gentlemen say is like a good lesson learned from this whole GameStop ordeal?
Let me just a few lessons. I think the lesson in general is like I said earlier, we have to figure out the financial system. If it's crypto maybe or something, but like people shouldn't have been able to pay off like student loans. And like it took this for us to be able to for somebody to pay off their student loans. Versus they did it the right way, which is they keep paying off or keep making their monthly payments, and they haven't student loan debt until they're like 50 years old. Like, so I think the financial system needs to be redone. Just something, because certain people is making too much money and other people is not making enough money.
That's facts.
So if we're going to change the stock market, you got to change everything.
Right.
Like, seriously.
I think that's a good point. Like the lessons, the financial impact from it. I think for me, being from the position that I've been talking about most of the night, it's like there's got to be some more, balances put into place. Like whatever the system is, it's not working. I mean, obviously the inequality, that's a larger conversation entirely. But you got come on, you're telling me that 5 companies with a smaller market capitalization than most big name companies somehow were this close from, like I said, I'm going to be clear, somebody coming at me sideways, not bringing down the entire financial system, but definitely threatening the very fabric of which it's made up. There's just got to be something more. Like more people got to hold things on hand. Like people, maybe the stock market needs to get more, more authentic, more raw. It's like, look, bro, might not be some money at the end of this trade if you really aren't careful. But taking it out on the Robinhood trader, the 18, 19, 20-year-old kid who's just like, I'm at home, I'm bored, why not? I've been at home going quarantine for the last 10 months. Like let me have some fun. That's kind of frustrating. Like there's people who can sustain damages like this, Melvin Capital and the like, but these guys, like, they're regular people. And I'm not saying that they didn't know the risk. I'm not. They definitely do. But just be careful in the way you want to do this next time. Like, don't isolate just these individuals. Like, find a better way to capitalize yourselves or to make sure that you have enough resources to handle something like this. Because, like, look, the situations that we saw when it happened, the stock had already been rising for a couple of days. So why the NSCC waited until that day to call? Like, y'all should have called at $250 a share. Like, facts. Look, bro, you might not have enough money. You might want to get some cash. Like, why call at $400 a share? Like, if it's rising that quickly, even if it fell at $250 a share, if it only ever got to $250 and then it came back down, that's still a lot of volume and potential, funds that you might not have. Like that's the part that kind of throws me off. And that's,
they thought it was a pump and dump. I think that's
it's like
they thought it was gonna go back down. It just kept going.
It just kept going up. It's like over the moon. So
right.
there's I think there needs to be some repairs in that particular part. And look, that's a Pandora's box of questions. NSCC, Robinhood, the brokerages, SEC, all these different groups and organizations that may or may not really care about the end person. But at the end of the day, as we all lived through the financial crisis, like. Nobody else, hey, I lost my house, but and to that point, like, can you imagine the person coming home like, I made $1,000 on GameStop? Yeah, but your 401k is wiped out. Like, what? Like, whoa, that's crazy.
Word. All right, gentlemen. I really had a blast talking to you guys, and I learned a lot just from this conversation. Hopefully, the people listening, I hope you learned a lot and you got some good outcomes from this. Femi and Denzel, appreciate you. You're always welcome back on the show. Thank you so much for being here. And our fans, for those who are listening, as always, you can always catch us out on Mentality Radio, catch us out on Apple Podcasts, Spotify, wherever you listen to podcasts on. And as always, we'll talk to you later. Deuces.
Thanks so much.